Good day. So our topic for today is income tax on individual. Sorry, it's quite late for my new video, and this only pertain here in the Philippines, okay? So our learning objectives would be number one, to define taxation here in the Philippines. Number two, to differentiate the tax per different person category in our National Income Revenue Code. And then to determine the taxable income and expenses, and to compute for individual tax at year end. Because take note, we already have the monthly under our payroll video. So taxation is defined. It is governed chiefly by the Constitution of the Philippines and Republic Act. So the Constitution, it's under Article 6 of Section 28 of the Constitution that state that the rule of taxation shall be uniform and equitable to all, and that the Congress shall evolve a progressive system of taxation. So meaning that the taxation law here in the Philippines must apply to everyone equally. People here in the Philippines, within the Philippines, and outside the Philippines, or meaning those that are abroad. And that the Congress would also continue to search the progressive tax system that would be helpful not only to the Filipino citizen but also to the government. So next, we also have the national law, and the national law is the NIRC, or the National Internal Revenue Code, enacted as Republic Act 8484, or the Tax Reform Act of 1997, and subsequently amending it is the law was is most recently amended by Republic Act 10963, or the TRAIN, or the Tax Reform for Acceleration and Inclusion Act. So this is now the new tax, which is what we call the TRAIN law, which simplified the taxation more, because in the previous taxation there are still dependents that are allowed to be exempted. So the tax is giving favor for those people who had 4 children. However, the train law was been enacted currently under the train law in 2018, which are applied in the 2019, and hence this already make it simplify, and that the income tax of the taxable incomes become more a little bit higher. So those who are receiving a lower pay is now taxed more minimally. Next, we also have the local laws. These are major source of revenue from the local government, or the LGUs. So the tax collected is by virtue of the Republic Act 7160, or the Local Government Code of 1991, and those sources from the proceeds collected by the virtue of the local ordinance. So this one are those that are passed under the local governance, like your business tax, because business tax, your business permit, mayor permit. So those are the things that has been collected. Your residence tax, these are collected under our local law. Okay? So what is the objective of taxation? So the taxation is the act of levying taxes, or the process by which the sovereign, through its law-making body, arise revenue to defray the necessary expenses of the government. So take note, since the government, they said the lifeblood of the government is taxation, because since the government is protecting its people, or stabilizing the difference between the rich and the poor by the payment of taxes, because the higher the income, the higher the tax. So this is what is the objective of taxation, and to provide the necessary needs of its people. Like for example, the roads, the bridge, and during the COVID, remember they also have the subsistence, or the one that are what we call the additional pay, or the additional benefits given to those that are who weren't able to work. So this is where our taxes goes. So we also have different kinds of tax. So number one is the income tax. So income tax is the one that we will be tackling for this video. We also have the estate tax. The estate tax, or these are the tax of the dead. Why? Because these are normally for the mana, or for the inheritance. Okay, and then we also have the donors tax. These are for our donations. Okay, so but we wouldn't be focusing on the estate tax and the donors tax. So what's the difference between these two is also called the transfer tax, because the estate tax is transfer from the parent to its ascendants and descendants. So meaning to to the the people under, or to his daughter and sons, or to her parents. Whereas donor tax, there are subdivisions. It could be from relatives and those that are not related. But take note, in tax law, the relation is only up to fourth consanguinity. We also have the value-added tax and the percentage tax. These are for business tax. Those who are earning more than 1.9 million would be subject to value-added tax, and those that are lower would also be subject to percentage tax. But you all still have the options to do the value-added tax, because value-added tax is, remember when we would buy something from the store that only costs 100, then you would see an add up of 12 pesos. That is the value-added tax, because value-added tax is transferable, whereas percentage tax is not transferable. We also have the excise tax. It's the privilege to exercise some activity like the wine, the mining. These are known as the excise tax. Next, we also have the documentary stamps. So these are the post, or the, what do you call this? The one that you would usually see in your diploma, and some of the alcoholic drinks that would have the stamp or the sealed. These are what we call now the documentary stamp. But we wouldn't be tackling those on our different video. We will be focusing only on our income tax. So what are the types of person under our income tax? So we have the resident citizen. We also have the non-resident citizen. We know that the resident citizen are those that are born naturally here in the Philippines, but in the Philippines, normally you can be considered as citizen if both of your parents or one of your parents is a Filipino citizen. It's not by birth. So meaning, if because here in the Philippines, you become citizen when one or both of your parents are Filipino citizen, and not because you were born here in the Philippines. Okay, so even if you're born abroad, when one of your parents is a Filipino citizen, then you can still be considered as resident citizen. But resident citizen are only those who are residing here in the Philippines. The non-resident citizen are those that are whose parents are Filipino citizen, and yet they are working or outside in the Philippines. So that's why they are called the non-resident citizen, like our OFWs, the tourists that would just go there to visit some relatives and then go back here in the Philippines, or those who would off to work with their family in the different country. Next, we also have the resident alien. Resident alien are those whose parents are not Filipino citizen and yet opt to stay here in the Philippines. Next, we also have the non-resident alien engaged in trade and business. So these are those entities or those people who are not really Filipino citizen and not residing here in the Philippines, but are doing business here in the Philippines. Next, we also have the non-resident alien engaged in trade or business. So if it's not engaged, meaning that that particular person could be an expat and only to stay here in the Philippines less than 180 days. Okay? Next. So what are the taxes? So we have now types. We have for our resident alien, or for our resident citizen rather, for our resident citizen, all income derived worldwide. So meaning, if you have some business outside the Philippines, like for example, Manny Pacquiao, who was properties here and abroad, would be taxed for all the properties within and outside the Philippines. Okay? So what is the tax rate? It's under our tax table under the train law, the new enacted law. Next, for the non-resident citizen, only income derived here in the Philippines. Take note, yung tax rate nila would still be under our train law or the schedules, which I will show you later. Resident alien is also only income derived within the Philippines. And then it's the same as the rate would now be same as our resident citizen. For the non-resident alien engaged in trade or business, income derived also within the Philippines. Tax rate same as under our resident citizen or under our train law. But those that are not non-resident alien, not engaged in trade or business, income derived within the Philippines and tax on gross. A good example of these are those people who do concert here in the Philippines but are foreign. Like for example, when Mariah Carey go here, and then you will be able to contract all the income from the concert, then the tax would now be on the gross revenue that is generated by the actor or the actress or those singer. Okay? Next. So What are now the different kinds of income tax? We have the active income. Active income refer to the income received from performing services. Like for example, wages, tips, salary, commission, and income from businesses in participation is material participation. So meaning you were acting or you were doing something for you to earn. Like when you go to work, you do work. So these are now wages. When you do haircuts, so you usually get fees or tips from that, and then the salaries and commission. So meaning active income are the one that you are performing something to earn for the money. Next, we also have the passive income. The passive income are those that you were doing nothing, but your money is earning for you. Like for example, if you have apartment, so the apartment earns for you, and you do nothing. You only invest your money for that one. Limited partnership, because the partnership would do that, or those that are enterprise which the person is not actively involved, like interest. So these are now what we call passive income because the two are taxed differently. Okay? So here is a good example of the different taxes that we receive. So number one is the compensation income. So we just some column, we have the resident and then the alien. So under our resident, we have citizen, we have resident and non-resident. Our under alien, we have resident, non-resident, this is citizen engaged in business and not engaged in business. So for compensation income, we said that for citizen and resident within and outside the Philippines. So that's why it's yes. For our non-resident citizen, we said that it is these are within only in the Philippines. So yes within the Philippines and no with outside the Philippines. Same for our residents and non-resident alien engaged in business and not engaged in business. So only within the Philippines. So for business or income tax professional, also the same as our income tax. You could see that for resident citizen, these are taxes between, within, and outside the Philippines. For non-resident citizen, resident alien, non-resident alien engaged in business, and non-resident alien not engaged in business, there are only tax within the Philippines or those income that are derived here in the Philippines. So we also have different kind of passive income. Number one is royalties. So those singer would be able to sell the copies of what they saw, their DVD copies. Those who write books would earn royalties. We also have the prize and other taxable winning. Like for example, when you won lotto, income tax from the deposits or benefit yields. Income tax for long-term deposit until terminated before 5 years, because if it's within 5 years, it is now tax exempt. And then you also have interest from income and the cash and property dividend. So take note for all those, for resident citizen, it is taxable within and outside the Philippines. For non-resident citizen, resident alien, non-resident alien engaged in business and not engaged in business, all are only within the Philippines. Okay? So what is now our tax deduction? So we have for employee, we only have the mandatory deduction. These are our GSIS or SSS. If you are employed on the private, it's SSS. If you are employed in the public sector, these are GSIS. The PhilHealth or those that are for our medical benefit, the Pag-ibig funds, and the union dues and overpayment of salary. These are the only tax. These are the only deduction under employees category. Okay? And yeah, unless you could show them or refile an income tax, you could also claim for the donation unless there are receipts for that one. For business, you have the itemized deduction. So the itemized deduction, these are ordinary and necessary for the business or the expenses. It could be the cost of sales. So for example, if you are into trading business, so all the amount that you bought for those that you need to buy and sell. Next, you also have interest, but take note, interest, we are, those have limit. It's only can be reduced to the 33% of the interest income. So take note, 33% only of the interest income. If you don't have any interest income, then you cannot claim interest expense. Those for representation, representation has two. If you are a seller of good, it's only limited up to 5% of your net sales. Take note. So if you are seller of goods or anything, so the representations is only allowed up to 5% of your net sales. For seller of services, it's only 1% of your gross receipts. It's you are into law firm, accounting firm, it's only 1% of your gross receipts. These are the limits. Next, you also have taxes and license. So taxes and license don't have limits. So meaning you could claim those you tax paid under the three constitutions, which is the NIRC, and all those that are imposed by the local governments. Next, you have utilities expense. So these are your water, your Meralco bills, and your telephone bills could all be under utilities. So don't have limit. Then you also have the losses, NOLCO, but we will discuss this in our other video because there are different kinds of NOLCO, like for individual and corporation. Then you also have the depreciation and amortizations and alike. So these are your depreciation because of the use of your capital assets such as plant and equipment that could be depreciated, and the amortization such as your intangibles and those that are lost under your impairment. Next, you also have the charitable contribution or donation. So for charitable donation, it depends. If it's for the government, it's 100% deductible. But if it's for other than the government, like foundation, non-profit organization, then it has limit. For individual, it's only 10% of the taxable income. And for the corporation, only 5% of the taxable income. Okay? Because this is also to protect the government for those who would transfer would transfer all their taxable income to other donation or other foundation, and it will now be totally non-taxable. Next, there are another option which is the optional standard deduction. If you don't want to do or to elaborate all the taxes expenses that you do, then you could the optional standard deduction, which is 40% of your gross receipts or gross sales. Okay, so meaning the 40% is automatically your income taxable. Okay, so let's now proceed. For example, so a family composed of a resident alien husband and a Filipino citizen wife with a dependent child. So the salary and allowance of Mr. Huyos arising from employment salary of 1,052,000, living allowance of 100,000, and a housing benefit of 100% of 300,000. So teaching salaries of Mrs. Huyos 240, and then gross dividend income from investment in share of stock domestic 100,000, and then interest 20,000 on peso bank account, capital gain on share of stocks of 5,000, taxable withheld by employer of the husband 197,626, and by the wife none. Husband is occupying a managerial position. So now let's go to the computation. So take note, our gross salary for Mr. Huyos is 1,152,000. This comprised of 1,052,000 salary and the 100,000 allowance. Then for Mrs. Huyos, we only have 240,000. The deduction composed of SSS, HDMF, and PhilHealth, which you could refer to our previous video for the table, and that would be per computed. That would now be 26,580 for Mr. Huyos, and for Mrs. Huyos, it's 14,400,000. So the taxable income for Mr. Huyos would now be 1,125,420, and for Mrs. Huyos, it's 225,600. Okay, so let's see. This is now our tax table under our new or the train law. So take note, for the taxable income for Mr. Huyos, it will fall under above 800 but lesser than 200,000. For Mrs. Huyos, it's only 225, so it would now fall under our 250,000 and below. Sorry for the arrow, it's quite wrong. Next, so let's now compute. So since for Mrs. Huyos, it's only 250,000 and below, so that means zero tax. Okay. So let's compute for Mr. Huyos. So for the first 800 of Mr. Huyos, it's 130,000. Then we deduct the taxable income by 800,000. So 1,125,420 less 800,000. So meaning you still have 325,420,000 times 30%, which means 97,626,000. So the due would now be 227,626,000. And then when you refer back there, you will see that the taxable withheld under 2316, or the one that has been given by your employer, as 227,626,000. So these are now there. So the tax that are payable for the BIR is zero, because for Mr. Huyos, the company already deducted the gross amount, and for Mrs. Huyos, it's zero. How about the other income tax? So take note that the following are not subject to income tax because they are already subject to final tax. Our passive income are normally subject to 20% tax before you receive it. Like for example, for the interest in the peso account, if it's less than 5 years, then your interest income would now be deducted at stock withheld of 20%. Same with your capital gains and sale on shares and dividend income and housing benefit. These are already final tax deducted, or meaning what you would usually receive are already the net amount. Okay? So for the corporation, the tax base of the domestic corporation and resident foreign corporation, taxable income, the gross income less deductions or allowable deduction is 30%. For regular corporate income tax, whichever is higher between the 2% minimum corporate income tax, which is subject to the gross income only. So you have to compare always the taxable income under your gross 30% income tax rate and the 2% gross of the income tax. So whichever of the two is higher or lower will now be your tax due to the government. And this is the one that is subject to NOLCO, the net loss carryover. Okay? So if you have any questions, you could reach me out, but maybe I will also put a video for those who were doing business, so that you would also know the computation for that one, for another example. That would now be on our income tax part 2 on next week. Okay, bye. Have a good day. God bless you all and keep safe.